Moving average convergence divergence is an indicator that we are going to commonly make reference to, and it is also termed the MACD or the MACD for short. And the first thing we'll do is we will have a look at the anatomy of the MACD. But before we proceed, it's important to point out that money can't buy you happiness, but poverty can't buy you anything. And I see that you've all taken action on learning a new skill that can certainly help you to acquire some money. And indeed, this business is actually it is a tremendous business. It can be an addictive business, it can be a profitable business, but you have to treat it with respect. You have to treat it like a business, and you have to be disciplined and patient in manner. And it can be a very, very generous business and really considerably change your life. And I love this business, and I'll be in it forever in some capacity or in a multitude of capacities, be it training, trading, managing funds, and so forth. The anatomy of MACD, we're going to have a look here. Now, we have what I've done here is I've placed the actual MACD indicator is down here at the bottom in a separate window, and also in a separate window is the histogram. Now, you may commonly find that the histogram and the MACD indicator are found in the same window, but this software just happens to put it in a separate window, which is fine. But what I've done is because the MACD, because the blue line on the MACD is a combination, as we see here, the blue line on the MACD is a combination of a 12 and 26 exponential moving average. What I've done is I've actually placed the 12 and the 26 exponential moving average here on the main candlestick chart, just so you can see how its relationship corresponds with the combined formula here in the blue line down in the lower window. Looking at the MACD, first of all, we do have a center line that runs through the 0 point, and we have the blue line, which is the MACD 12 and 26 exponential moving average combined formula, as well as we have a separate, the red line here is a separate 9 setting exponential moving average, and this is the histogram here. And what the histogram does is, if you'll have a look here, how the blue 12 and 26 crosses over the 9, the red, and you'll see here as it crosses over that the histogram also has a what's called a histogram center line, and we see here that the histogram is crossing over the center line from the from above to below, and this histogram simply corresponds with the breadth between, or the distance between, the blue and the red line here. So you see here as it expands or it becomes wider, the distance becomes wider between the two indicators. The histogram is just simply a better visual graphic of the separation of the two, and we'll talk about this a little bit later, but the movement in the histogram can potentially lead a move that occurs in the market. And that's the basic anatomy of the MACD, and we'll look at it a little more closely in the following slides. Just to give you an overview as to how we're going to look at the MACD, it's a simple momentum indicator, and we're going to use it more in the area of divergence, but it just measures the difference between the 12 and the 26 day exponential moving average. Moving averages are lagging indicators, and that's important to note because we want to get in trades at points, we want to get in trades at the stage of the initial move, And actually sometimes the lagging indicators can often offer a confirmation as to whether or not our trade is being supported by the lagging indicators or by the market. But we are going to look at ways where MACD can lead moves as well. Ultimately, what we're going to look for is a disparity between price action, or the candlesticks in the chart, and the MACD direction. And this is a term that we are going to call divergence. And we are primarily going to look at MACD and its divergence or divergent nature relative to price action. A divergence in price action and MACD may lead price action lending to a good trade opportunity, in combination, of course, with all of our other tools that we will effectively use during our trading. Looking at MACD a little closer, I still have the 12 and 26 moving averages here placed on the chart, and I just want to show you how you see this green line here, how the 12 and 26 blue line is moving across the 9, the red line. And if we look down our chart, we will see how the blue line is crossing above the center line, the MACD center line. And so just so you see the relationship between the two. In addition to this fact, we see here when the MACD blue and the red line are crossing, we also see a cross in the histogram across the histogram center line. And I've just noted here as price moves, as the MACD 12 and 26 moves below the 9 exponential moving average here on the chart, we also see again the blue line crossing to below the center line in the lower window. And once again, as the blue moves above the center line, again we're seeing a crossing of the 12 and 26 and the 9. And finally, at the end of the chart, once again we see the 12 and 26 crossing below the 9 exponential moving average. And again we see the blue combined 12 and 26 crossing below the MACD center line. As well, as if you look on this chart, you'll see that any time that the blue crosses the red, we will see that the histogram also crosses, because at this point the histogram is effectively closed, as we see here. It is closed and now moving to the lower side of the histogram center line. We've simply noted that here in your book, and showing the corresponding price action of how the blue line crosses the red line and the histogram crosses the histogram center line. And again, the breadth of the histogram indicates the breadth of the distance between the 12 and the 26 and the 9, or the blue line and the red line.